Hello and welcome to Trading Hour live from the CNBC-TV18 Motilal Oswal studio. I'm Sonal Bhutra. With me as always is Hormiz Patakia. Well, we got that update coming by from the RBI policy meet. It's status quo. The rate has been unchanged, but there have been a slew of measures for the banking industry. We're still getting them. Of course, it was said in the release that came out, but yes, still to get the details of that one. Ritu tells us there are around 22 of them. So we'll of course analyze that. But yes, markets reacting to that update that has come by. The Nifty is up almost 80 points. We have the mid caps which have recovered from the lows as well. The bank's doing well. So there's a 400-point uptick on the bank Nifty itself. It is, of course, led by some of these private banking names. The Nifty Bank is at the day's high. This hour itself, we have a lot of them which are doing well. So we'll watch out for that one. But yes, individual updates in terms of ECL framework coming in from 2027. There's a lot in IPO financing as well. We'll discuss that and all in greater details.
Very interesting measures announced by the RBI governor. One such stock that is reacting to it is HDB Financial. And just get that up before we go to Ajay Srivastava. And the overhang on the stock, which was about the overlapping with the promoter businesses, that has been done away with in the final guidelines from the RBI, and that has had an impact on the stock. 3% higher on HDB Financial. It's been rebounding from its IPO price. It slipped below that on Monday, and it's now seeing some bit of rebound. This is in fact the best single-day gain that the stock has had since its listing day, which was in July. So good going for HDB Financial. Ajay Srivastava, who is the CEO at Dimensions Corporate Financial Services, is now joining in. Ajay, good morning. Thank you for joining in. The policy on expected lines, if you could call it that, but the slew of measures that have been announced for the banking segment, for the IPO financing related issues as well. But sticking to banking specifically, does that ease out a lot for the banks going forward, and it's showing up in the reaction as well?
Of course, it does. I think it's a great way to kind of just put some relaxation in the policy, because we're just too stringent about everything in this country at this point of time, particularly the capital market relaxation in terms of lending against shares, IPO financing. I think it's a great move to show liberalization, and also reflects, to my mind, more than anything, a little bit of panic setting in the system to say what would kind of revive this market and stall the FI selling, in the manner, and therefore is welcome. It's a great step, although from a short-term perspective, it's great. From a longer-term perspective, I think the Basel III norm, which are going to come into place, we're going to just evaluate how much impact it's going to have on provisioning. Yes, there is time for 3 to 4 years, but if you're an equity investor, you need to be wary about that in the next 3 years, how much capital will they need to earmark against the Basel III norms. I think we'll have the numbers in a day or two, and our teams will take it out. But by and large, I think for the short term, it's a great positive, because the mood is relaxation, not kind of more stringency. Gold loans were kept out of it. At one point of time, the RBI governor used to hate it. Now they are kind of acceptable. But the only disappointment, I don't understand from where do they get the inflation number from? Because, and that's where the policy goes wrong. And that's why you see the yields are not dropping, in the government yields are not dropping, is you start with the wrong assumption of interest rate and everything else falls apart. If you look at your insurance premium, look at a car insurance, look at a health insurance, look at your education, look at a healthcare, all the services you consume as a normal person. Where is this 2%, 3% inflation? It's going about 10, 20% at this point of time for most people. And that is why the governor did not say it. I was looking forward to, maybe he'll explain the press statement as to what's he going to do to reduce the yield on the 10-year government securities, because the transmission of interest rate is not happening. Although you as a saver has been penalized exactly 106 basis point on FDs. So you penalize the savers, so now they have less purchasing power. You maybe compensate a little bit to the lenders, and that's why the economic policy doesn't work. So good things done, but fundamental economic policy is not working because you're working with the wrong framework of inflation numbers.
I think everyone would agree on what's happening on ground in terms of the price hikes and inflation and premiums, the things that you mentioned basically. But that's about the overall macros. There have been a lot of measures as well, which Hormiz was talking about as well. You spoke about how enhancing limits for the IPO market, that's a positive. But Ajay, here, if we look at the slew of IPOs that have come by and the kind of retail interest and subscription that we're seeing, and still they're not seeing the kind of listing gains that at least a lot of investors expect. What is your take on the entire phenomenon that is playing out?
Oh my God. They are lucky to be IPO'd and subscribed. They are what I call in our office nutcase valuation. You got to be really nutty. And I wonder the investment bankers, the mutual fund who are buying the anchor book, what exactly are they buying at what prices? And look at the companies. It's not some fancy quantum computing company which are coming to the market. We are having already a Chucky mill coming to the market. We have a Mangal Sutra manufacturing market. The lowest of the lowest quality of IPOs are coming up with absurd valuations. I'm even surprised that they managed to squeeze through, which is a great thing because mutual funds have got money to do it. But that's not a great sign for capital market. You need to get capital to where the growth is, where the future is. We are putting capital to where the past was. Can you imagine a flour mill getting an IPO done in this day and age? It's just ridiculous. I think it's just IPO business is just ridiculous at this point of time. I'm not saying all are ridiculous, but 90% of IPOs don't deserve anything close to this pricing. And whoever is buying it 2 years, 3 years down the line, we'll see what happens to the share prices of these companies. Believe me, they will not even be half of what they're coming at today.
Showing up in the listings today as well, BMW Ventures listed at a 25% discount to its issue price, and a lot of the other listings as well. But Ajay, the other major talking point has been IT. Start reporting results from next week onwards, with the expectations are already pretty subdued for the sector itself. Do you believe that FY26 will just end up being a washout year for the entire sector, and maybe once they get their act together, we can expect some rebound from FY27?
There is an old Hindi saying ki mara hathi sawa lakh ka hota hai. The question is, when you decide the elephant is dead, so at least the tusk can be harvested. It's a one-way street of going down IT. And I think the worst point of the IT industry's future was just 18,000 crore buyback of Infosys. That shows you how pathetic the situation is in the Indian IT industry, that they could not find anything to invest in the world. You look at the top 7 in the US, they are investing 25 billion in a quarter. And my company goes and gives back money to shareholders because it says, I can't find investment avenues. Now, would you want to buy a share of such a company which feels in IT sector they cannot find anywhere to invest? Now, if that is the management which is running these IT companies, I would not put my money into this. We have zero investment in the last 2 years. We continue to have zero investment, and we are negative on this outlook for IT, not because the industry is not good. The management who are running this for their promoter shareholders, not for the common shareholders and growth. If you can't find growth in today's world and where the world is moving different tech, I think you really got to be blind or stupid or dumb or all three, in which case you don't get my money to invest in your company.
All right, we take that. Ajay, thank you so much for being so candid and honest about your opinion. That's the word coming in from Ajay Srivastava. With that, we'll slip into a short break. Up next, we'll focus on the crypto market with Manisha Gupta on the other side.
CNBC-TV18 presents Crypto Corner, powered by CoinDCX.
Welcome back. As promised, let's shift focus to the crypto space. Manisha is now here with more. Manisha.
In Crypto Corner today, we are talking about the month of September, which has worked out positive for crypto or virtual digital assets. Bitcoin actually is closed September in slight mild green there. And if you look at the overall market cap, that also turned up by at around $4 trillion yet again. So the US market shutdown, of course, the government shutdown assessment is something that the street is looking at. But as you've seen in last 24 hours, we've seen gains come back in case of precious metals, and so has been the case for crypto as well. The month of September also is important because ETF launches, instead of being a case-to-case basis by the US regulators, it is now an open market. So we've seen 3 important major ETF launches as well coming in: Rex Osprey XRP ETF, Rex Osprey Dodge ETF, and the Grayscale ETF as well. So this is our development that we saw in the month of September in sense of regulations and ETF launch. The other thing really has been about crypto adoption, and September really saw more institutional participation, more companies onboarding Web3 and blockchain as a technology. And then you had countries like Thailand and Vietnam launching newer initiatives, experimenting with crypto when it comes to inbound tourism in sense of payments there. Airlines like Emirates and Air Arabia also are now adopting crypto payments in sense of acceptance there. There also are countries like Kazakhstan, Pakistan for that matter, which are moving ahead in sense of crypto mining and adoption also. The other thing that seems to be catching up even more in the month of September in sense of numbers has been tokenization. So the interest in stock tokenization clearly seems to be accelerating in the recent few months. You have platforms like Robinhood and Kraken, which are now offering tokenized stock products. Nasdaq also has requested SEC approval for rule change to allow listing of tokenized securities on the platform, on exchange that is. And then there also is a statement from the SEC Paul Atkins where he says that tokenized assets could improve access to financial markets and also reduce the costs going forward. Very interesting pattern should come in on your screen, because every time history shows that if the month of September goes positive for Bitcoin, then it's a given then October and the fourth quarter of calendar year are much in positive. That's a precedent that we've seen in 2023 and 24 as well. After a positive September, October was up by nearly 28% in 2023 and October 2024 closed up by nearly 11%. And that led to positive gains for the fourth quarter of that year as well, where we saw 23 close up by 49% for Bitcoin. And the fourth quarter of 2024 closed up by 45%. So that's exactly what the markets are hoping for the month of October and this quarter going forward for Bitcoin and crypto.
Manisha, thank you for that. Take a short break. On the other side, we get you one of the listings of the day, Jain Resources Recycling. The management joins in on the other side to talk about the road ahead for the company.
CNBC-TV18 presents Crypto Corner, powered by CoinDCX.
Welcome back. You're still tuned into Trading Hour. Let's talk about the primary market action. Jain Resource Recycling made its D3 debut with a good listing. The company, the stock listed at 265 rupees versus the issue price of 232 rupees a share, which is a 14% premium. Kamlesh Jain, who is the chairman and managing director at the company, is joining us now to discuss more and the outlook going forward as well. Mr. Jain, good morning. Thank you so much for joining in. Now that you've listed, you will be able to give us forward-looking statements and tell us more about your plans as well. You did revenues of around 7,100 crore rupees in FY25, margins of around 5%, profits of around 223 crores. With the expansion plans in place, with the increased capacity utilization, what kind of numbers are you looking at in the next two fiscals?
Yeah, thank you. So we are definitely looking for a robust expansion plan, and already, as we have discussed last time, for the copper cathode, which is going to start from the next year, and value products of copper. And we are also going to enter in many areas of recycling, like tire recycling, e-waste recycling. So company has got a robust plan for next 2 years to grow in the recycling sector, which is the main forte for us. And recycling is going to be a huge opportunity for the this next 20 years. Will grow and grow. It is not like business. It's a compulsion to recycle if we have to live the life on this planet.
Mr. Jain, good morning. Thank you for joining in. Congratulations, first up, becoming a public company today. Now that you are operating at utilization levels of 75% and considering the projections that you are making, are you having any capacity expansion plans on the anvil?
Of course. So we always keep a 20% capacity extra to grow. In our business, it is always purchase order book matter than the sales order. Sales is always there for us. There is no problem for doing sale because it's a commodity what we manufacture. It's the base raw material for any downstream project like copper manufacturing of tube or sheets or battery manufacturing. So in whatever we are able to source, we can recycle and we can sell. So that's a circular economy solution. Our purchase book matter, so we keep 20% capacity extra. Once it gets full up, we again build up 20% capacity extra. So this year again we have created around 25% capacity extra to cover up the future raw material.
Mr. Jain, I just want to understand, how does pricing work in this case? Because I've had conversations with some battery recyclers. They've spoken about that maybe the scrap prices go down sometimes the output prices go down. Is it volatile for you as well? In that case, how do you ensure maintenance of margins and profitability?
So we have a strong and robust mechanism for hedging all our purchase and sale. Our margins are not at all get affected, and it has been completely locked from day one when we purchase the material. So we hedge in MCX, hedge in London Metal Exchange, and sometime in COMEX also. As we buy 24 hours round the clock purchase, so round the clock we hedge back to back with every apple to apple. So there is no risk for any variation in the price and the margins, the profit margins. We are above the risk factors of price movements of the base metal commodities.
Mr. Jain, the last time you spoke to us, you had mentioned that exports are 60% of your overall business. If you could quantify that for us as to how much of it goes to the US market, and what are the situations that you are facing from there currently, and going forward, do you expect to either maintain, bring down, or increase the share of exports as a part of your overall mix?
So first of all, we don't export to US at all. Our export is zero to US market, because commodities we sold in all in Southeast Asia, Korea, Japan, China, Singapore, Malaysia, all in Southeast market, and somewhat in Middle East market, but mainly in Southeast Asia market, where the freight cost also is almost zero for us to ship from Chennai to all these countries. Now, second point is we buy from US. So we don't sell to US, we buy a lot from US, around 17% last year purchase. And this is also we buy substantially, but our domestic purchase is going very big now. So come back to the US side, we have no effect of tariff war or anything going. And this kind of I will not call garbage, but this kind of scrap and recyclable resources, every country has to export to India only because of the India's USP, because of India's ecosystem for recycling. So Indian companies are doing very well in the recycling sector, and they will grow more and more.
Also, maybe because we don't segregate enough, and that's why some of the waste cannot be recycled also. Mr. Jain also wanted to understand the point on growth going forward. 5% margins currently, 5.2 to be precise for FY25, 7,125 crores in terms of top line. What kind of growth are you envisaging, considering that you're saying this is a business which would continue to see growth?
As I said, recycling is not a business where it is by choice. It is by compulsion. We have to recycle if we want to live the life on planet. I mean, whether it's domestic or it's overseas. And what we do is not typical waste to energy or typical waste management. What we do is very different type of recycling. These are recyclable resources.
Yes. So, Mr. Jain, in that case, what kind of growth will you see?
So definitely the growth is, we are growing last so many years around 30-40% CAGR, and I expect same level of growth for the next years to come, and it will be maintained on a strong growth path. I can't tell exact numbers, but I am sure that the company will be growing for the years to come.
And margins, will they improve? They've improved from 4.1 to 5.2%. Will that trajectory continue as well?
Yeah. Yes, in this business of recycling, the scale is more important. So once you grow the scale, the cost of production goes down, the fixed overheads goes down, and that way the margin goes up. So when you do, our top line goes up, I am sure our bottom line margin will also go up because of the cost will go down.
Right, Mr. Jain, thank you so much for sparing time and joining us. Congratulations on your listing once again, and we look forward to having you after your quarterly results as well. The management there of Jain Resource, and bucking the trend, if you could call it that, among the list of IPOs that have gone public, have listed recently 20% higher in comparison to the issue price. By the way, the index is now at the highest point of the day. The Nifty now 120 points higher at 24,730, and all credit to the Nifty Bank. In fact, now heading to the 24,750 mark now is the Nifty, building on to those gains, and credit to the Nifty Bank, and it's back above that mark of 55,000, building on to that as well. 55,300 is the first level now to watch for on the upside. 600 points higher on the Nifty Bank after the slew of measures announced by the RBI governor. Take a short break, more on the markets on the other side. Welcome back. Take a look at the bank Nifty and 600 points higher on the index. You pull up the Nifty bank constituents as well. Most of them either near or at the highest point of the day, be it Axis Bank, be it HDFC Bank, be it ICICI Bank, all of them contributing to the gains on the index, and the broader market names as well. There you can see the list of contributors: ICICI, HDFC, Kotak, Axis, all of them. But the PSU banks though are sulking a little. SBI, PNB, Bank of Baroda, they've run up quite a bit as well. So not so much on the PSU banking front. That index is at the lowest point of the day. Not so much in the broader markets as well. That too continue to remain around the flat line. But the last few minutes have been all about the Nifty bank and its impact on the Nifty subsequently. But that does not take away from the fact that there are a lot of broader market movers as well. Netweb Technologies is now up 12%. And just before we get to that, on to a conversation on the auto sales. The M&M total tractor sales during the month of September were up 49% from last year. My colleague Parikshit spoke to Vijay Nakra, who is the president of the farm equipment business at Mahindra & Mahindra, and began by asking him about the September sales and the demand boost after the GST rate cuts. Listen.
What you're seeing, a large part of the performance obviously is attributed to the benefit of the move by the Honorable Prime Minister, which is to reduce GST. We are seeing the benefit of that play out at the start of the festive season. But there are two things that I also would want to add to that. One, we must understand that the festive period last year to this year needs to be understood in terms of number of days. Last year, the entire festive period was in the month of October, which means Navratri and all of Diwali, except for the last 2 days, were in the month of November. This year, the festive period has been split between September and October. So we've seen 9 days of Navratri this year in September. Dashami is tomorrow. Which is in October, and Diwali is in October. So one should actually compare the festive period performance at the end of October to look at September plus October. That's point number one. Second, I think also, the favorable monsoon with 8% higher long period average, reservoir levels at 90%, the government's announcement of a significant increase in MSP to increase the money in the hands of farmers, and the higher 2% land sowing of the Kharif period. All of this have augured well both for the month of September and will continue to play out well into the festive season of October.
Right. Now, if I were to ask you about total sales in September, you're talking about 64,946 tractor sales. How much of this came in just the 9 days of Navratri?
Again, there I don't think it's the right thing to talk about as an absolute number. And Parikshit, let me tell you why. The reason is that the announcement for drop in GST had come in earlier. So normally, if that was not the case, we would have seen some amount of spread of sales to happen through the month of September. But given that the GST benefit was to come in from 21st of September, which was the start of the festive period, deliveries pre-21st had slowed down, and all of that sort of flowed into the last 9 days of September. So I don't think it's a fair comparison, but the statement to say that it has been significantly a strong performance is what counts as far as the 9 days is concerned, whether we talk about deliveries or inquiries moving forward into the month of October.
Okay, now as of right now, as of 1st of October, what would be the booking pipeline that you're sitting on, and what could be the kind of growth you're looking on a year-on-year basis, on a month-on-month basis in October?
But it's difficult to give that guidance. Again, I think in tractors, we should just understand the context of booking, because, over here, you may have a lot of bookings, but what matters over here is that conversion, because, unlike some of the other segments and sectors which are lifestyle products, over here, there is a process of, this asset is one of the highest cost purchases of a farmer, and hence it's the ability not only just of the down payment, also the financial approvals that come in from the banks and the financial institutions. So all of that has to come together for finally the delivery of the product to take place. So again, I'm not getting into specific number to say what is the opening booking as we get into October, but the pipeline is very strong for us to be able to convert that into numbers in the month of October. And again, in terms of strong performance for October, I'm kind of reiterating my point that one cannot compare September to September separately and October to October separately for the reason of the festive period. But having said that, September plus October, we are confident to continue with the strong performance that we are doing with the tractor business. And I think even the industry will continue to play out very strongly.
Right. If I were to ask you about the actual demand sentiments, have you seen an actual uptick as a result of the GST reduction? Because a lot of the customers would anyway be holding back sales till Navratri because of the Shraddh period. How would you actually gauge the sentiment on the ground right now? And going forward, what would be an outlook for tractor sales across the country, even though you cannot give us an estimate right now?
Yeah, how do we gauge the sentiment this year compared to last year? I think the best measure at this stage is the kind of inquiries that we get at our counters, and that is significantly higher compared to last year. Whether you look at Shraddh plus Navratri or you look at only Navratri, so that is a very strong indication that farmers have sort of started understanding the benefit of the reduction in GST, because that plays a significant role in the input cost for a farmer. In their calculation of their earnings. So the strong inquiry pipeline gives us that indication that as we sort of get into the second part of the festive season, the demand is strong. I also want to say that, the reduction in GST is a fundamental change. It's not a festive season offer where the customers are just going to rush and try and get that benefit in 9 days or 18 days. So the customers have understood that this is a significant change that's come in. A lot of them, as they start buying tractors now, getting into the Rabi season, have started buying it in the festive period. And I think this benefit is not just a festive period benefit, but we'll probably see it play out even for the rest of the year. And hence, we believe that the second half, while the first half has seen for the industry about 11.5% growth, this sort of strong industry performance will tend to continue in the second half of the year. And I'm not giving a guidance, but I'm just saying that the strong momentum of demand should continue even post-festive season in the second part of the year.
Okay. Without commenting on Mahindra, any industry estimate as to what kind of growth the industry could post for the full year?
Difficult to put a number to it now, but like I said, we've seen a double-digit growth in the first half, and I think that sort of momentum should definitely continue, into the next couple of months of this financial year.
All right, that's the word coming in from M&M in terms of what the outlook is looking like. They expect festive season to be strong over September and have strong booking pipeline for tractors in October. Time for a short break now. We'll get you more on the markets on the other side.
Boy, have a look at the Nifty Bank now, 650 points higher on the index, and that has now taken the Nifty to the 24,800 mark. So almost 700 points higher now on the Nifty Bank. 55,300 has been conquered, and as of now, at least, the Nifty Bank also within 15 points away of that 24,800 mark. ICICI Bank, HDFC Bank, Axis Bank, all of them trading gains of 2.5%. And just before we wind down on the show, just pull up Tata Motors as well. It just had an announcement from the company stating that they will be announcing the record date for the CV business demerger shortly. Remember, today is the effective date of the demerger taking place. So 1st of October, the effective date, the record date will be announced shortly as well. So 3% higher on Tata Motors. And also springing up today is Trent. 3% higher on that stock as well, nearing the highest point of the day among the top gainers on the index. But with that, we call time on this edition of Trading Hour with the Nifty Bank at the highest point of the day, as is the Nifty, from Sonal and me. Thank you for watching. But just as we go into the break, here are some market opinion from Nilesh Shah, the Managing Director at Kotak Mahindra AMC, on the IPOs, the performance, the FPI outflows, and a lot more. And listen in. And there, as you can see, the record date has been issued now as the 14th of October has been the record date for the demerger of the commercial vehicles business from Tata Motors. So 14th of October will be the record date. So shareholders will be entitled to one share of the demerged CV business compared to one share of the current listed entity. And a day after the record date, Tata Motors will start trading X the CV business, and it will be renamed as Tata Motors Passenger Vehicles Limited, and the demerged entity will begin trading sometime mid-November, is what the company has mentioned, as Tata Motors Commercial Vehicles Limited. So with that, we call time on this edition of Trading Hour. Thank you so much for watching. Halftime report on the other side.
With the barrage of IPOs, undoubtedly, there is no worry on the quality side. SEBI has done a fantastic job on ensuring that only quality IPOs come. Institutional investors also have done a reasonably good job in ensuring that they invest in reasonably valued IPOs. Many of the IPOs which have opened at a discount had virtually no institutional participation. So my recommendation to investors, please don't make mistake on your own. Learn from our experience and go for those IPOs where you believe there is a reasonable institutional participation. 3-6 months remain challenging. The FPIs are on the selling spree. They are saying for last 5 quarters, your earnings growth is single digit. Your valuations are at premium to historical averages. And most importantly, you are getting hit by US tariff and geopolitics. They are absolutely right in saying this. Generally, in festival season, we have seen some amount of redemption to either buy a house or buy a motor car or buy jewelry. And ultimately, wealth is there for spending. So there will be probably similar intensity of gross flows, but the net flows will be lower because of the redemptions for consumption or spending.